Morning, everybody. 28th of September. We're Signal Centre talking ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning.
How
How
you
you
doing?
doing, Joe?
Yeah, I'm all right, thanks. Nice to see we've
Good.
got our uniforms on today.
That's what?
Both got our uniforms on today.
Yeah, exactly. Yeah, yours is a little bit darker than mine. Mine's a bit worn.
You've been fading in the sun.
Yeah,
That's what you're doing
overusing
during
it.
the day.
Yeah,
Just
exactly.
go and
Yeah.
sit in the garden.
Well, yeah, I just go out walking around the town, just showing it off.
Yeah, guerrilla advertising.
The amount of people that stop me and just say, "What's that?"
Great. Okay, let's get stuck into it then. So oil is up at $80 a barrel, a sign that demand is running way ahead of supply, depleting inventories amid a global energy crunch. Anybody in the UK will be familiar with this, with the queues at the petrol stations, which don't seem to be dying off at all. The UK officially put the military on standby to help deliver supplies to gasoline stations in an effort to stem a widening crisis that has engulfed Prime Minister Boris Johnson's government. Some drivers in the UK company BP that handles fuel will vote this week on strike action. So it's all coming together nicely at once by the looks of things with
Yeah,
regards to the
perfect
fuel
timing.
prices.
Thank you for
Yeah,
that.
yeah. Cheers, guys. We've got Bank of England Governor Andrew Bailey moved to reinforce the option that interest rate rises could rise as early as this year, while also cautioning about the limits of monetary policy to balance diverging forces in the UK economy. So there is a lot in the melting pot at the minute, it seems. We'll have to wait and see how it all plays out, but we'll come into the chart shortly. All on the back foot, certainly on the stock side of things at the moment. It was a positive session in Asia overnight, particularly in Hong Kong and China, that helped highlight some growing optimism that the Evergrande situation can be contained. In terms of what happened elsewhere, we had losses in Australia and Japan, with the latter due to vote for the Prime Minister's replacement tomorrow. So elections going on in Japan at the moment. So Steve, let's get stuck into some charts. Where do you want to start today?
I'll start cryptos. I've produced a video. It's on YouTube. Which reminds me, I've got to go on there and tidy it up, put a nice little front page to it, and yeah, just really looking at what we've done in the last week. Say we've had a nice reaction higher. I'll show you my daily chart. This is where we were this time last week. Had a nice reaction higher, stalled at 45,160, and since then we've been under pressure again. Obviously, as we know, China have outright banned cryptocurrency in China, so there's fines and severe punishment if you are caught with either trading.
Hands cut
Severe
off.
punishment.
Severe.
Yeah, I think it's going to get to that stage. Your plug cut off, or whatever sort of like feeds your computer or powers your iPhone. Yeah, it's under pressure again this morning, and just even in the last sort of like the 4-hour chart, we can see the sort of the reaction from last week to 45,160, and we had another lower high, and we're in this triangle formation with it'll tendency to break to the downside because we are moving down into this pennant formation. And yeah, measure move target for that is around about 36,000, and in this last couple of hours it's taken another little dip to the downside. Support coming in at 41,500. If it breaks there, the 40,800 comes under pressure, and then 39,570. So sort of 3 levels to watch there in Bitcoin. Cardano as well under pressure. That had the reaction from last week up to the pivot level, which I was talking about, which was the previous all-time high at 246, and it stalled there and retraced. So again, that's under pressure and likely to break lower. Ripple in a triangle formation also likely to break lower in Ethereum. And we were talking about we're wondering why we haven't had more of a sell-off based on the China complete ban, and I think there's a lot of people have found ways of, it's not an easy to move their currencies into other exchanges which are less traceable. So that's what's been going on. It feels also that the
Just exacerbate the problem, the fact that people are hiding it, and it's sort of
exactly. Well, exacerbates one of the problems. It's the problem that we all know is the risks of money laundering and sort of like moving currencies away from, or moving value away from the sort of central banks, which is they don't really like. But also I saw the overall longs, the long-term investors on cryptocurrencies has moved in the last few months from 59% to 70%. So all these sort of shock tactics that we're seeing from the people like China and other countries that are trying to sort of like stop this influx into the cryptocurrencies is failing because of the sort of like the attitude of the longer term investors. So that's one thing to think about. 70%, and so with this volatility or this sell-off, you're getting bigger traders sort of buying into it and less people panicking out of it. So that's one of the reasons that
okay.
it's not really had the impact that we've seen or expected. Crude oil, yes, it's back up to the level we've been talking about for a while, which we expected this 6th of July high. We've poked our head above it and stalled. So this is WTI crude, which is $76. Brent crude, as Joe said, hit $80 this morning. It's also got a bit of a gap on the chart. This is like a weekend gap, so I quite like that. From a technical perspective, I expect that to get filled sooner rather than later. So maybe a little bit of caution if you're just long and sitting there with it. There is a potential for a slip back to 77.43, but I fully expect that to be bought into as well. On the precious metal side of things, we've got gold remains under pressure. We got up to 1760 yesterday, and overnight or in the last few hours, we've had a lower low, excuse me, formed on this 4-hour chart, and I continue to sort of like have the same sort of tact on this. Gold really below 1790. I'd rather be short of it, and really looking for a move back towards the 1680 for another retest. 1730, where did we get to? 1736 is today's low. A break of there should open up a move towards 1723. Silver, took a look at this on the gun to head yesterday. Looks like I may have been stopped out of that, but the move has continued lower. So another sort of poor timing of a trade idea. Maybe the stop was too close as well, as we know that sort of, the stop should have been really a lot higher, but I had a gun to my head, so I had no choice. Indices, as Joe said, have been under a bit of pressure again this morning. Seem to sort of bounce back during the day when the US come in, the light cavalry charge, and but this morning we've had on the hourly chart bearish outside candle and then further downside. DAX, we were buying a dip in there, already been stopped out on that on an intraday trade this morning, and it's moving down towards the ATR level in front of 15,400. But since sort of Monday morning, we've really seen this got up to 15,720 really early on in the trading session, and we've really seen sort of like the bears sort of taking a grip of it again. CAC has broken down below the support, the short-term support at 66.24. Let's get onto a 4-hour chart, get a little bit more color. We can see this was also a swing low about 9 days ago, and we're looking to retest that 65.60 level in the CAC. The Dow looks a bit toppy, shooting star candles, hanging man candles, everything you want to shake a stick at. And on the 4-hour chart, we've got a bearish outside candle forming. That concludes at 10 o'clock, so we've got another hour to play out. NASDAQ has broken lower as well, broke the 15,100, been down to 15,000, big psychological level there. A break below there is support coming in around about 14,800. S&P is still above the 4,400 level, which I see as a decent support. But again, bearish outside candle and this reversal formation tells me there's potential for further downside, but we always get to this point in the week, don't we? Tuesday or Wednesday looks like negative, and then all of a sudden someone comes along and saves the day.
Yeah.
Aussie 200 under pressure. That's just tested the 72.20 support level. China 50 as looks like it's hanging man candle topping out here, so that's under pressure as well. The Hang Seng really hasn't sort of like recovered much at all, and again this has run into resistance in front of the 24,733 level. Nikkei is the one that seems to be holding up, but again beware below 29,430, which is only 500 points away, which is a little smidgen in the Nikkei stakes. So yeah, all looking a bit toppy from the indice point of view. You know, as always, I feel bearish towards it, but so many times in the past it's come back and bitten me.
One day it'll work, Steve.
One day it will. I definitely won't be short of it.
No, I can guarantee that. Thank you for that roundup, Steve. Really good. Yeah, it looks certainly those indices look like they could be due a bit of a pullback. We'll have to wait and see. Okay, dollar index trading within this channel, trying to get above this 93.43 level again. We're above it now. Whether or not we can hold is the key question. Above that, we've got this key swing high from the 20th of August. That's at 93.73. I think above that, then we started looking for higher prices on the dollar index up to this previous swing high over here on the left, which is on the 25th of September last year at 94.74. And then we're in the process really of forming quite a large bottom pattern, I think, on the daily chart of the dollar index. And this key level here, if we flip it over to euro dollar, a really key level of support has formed at 116.64, which is this low from the 19th and 20th of August. It's getting very close. As you can see, there's not a lot of support around here. There's a lot of fresh air for this to move into. I think the next level we'd be looking for potentially is this swing low here, which is back in November last year. So we're getting very close, I think, to completing this really large head and shoulders top pattern. Arguably, we have already completed it, and we did it over here somewhere, but it wasn't sort of clean or sort of impulsive to the downside, which I'd like to see. So I think if we take out this low here, then it's on, and we can look for lower prices over the medium term down to 110.56. So keep an eye on that. You may get some sort of messing about. Maybe we'll get a breach of that intraday before the buyers step in and try and fake out any of the stop losses that are inevitably sitting at this level. So do be careful at that point. Looking at cable, that's kind of stabilized a bit, I suppose, in front of this support at 136.00, down to 135.71. While above that, this blue line in particular, there is potential for this to continue to be range bound in the short term. So not many opportunities there, I don't think, at the moment. Euro sterling, big outside candle formed yesterday, as you can see there. We're trying to get some of it back today, but failing really to make too much of a dent into that. Overall, the trend remains bearish, and I think we're looking for lower prices down to this 84.50 level in the short term. Looking at some of the riskier assets, going to focus more on New Zealand dollar today versus the US dollar. This continues to trade lower. There was a sort of big pinch point in here of resistance that I was targeting and expecting the sellers to step in, and they've done that. And we've seen the selling persist since then. There has been a bit of an uptick in volume as well. Expecting lower prices here. I think there seems to be a bit of risk off at the moment, and therefore New Zealand dollar, US dollar is likely to suffer, being considered a riskier currency pair. So looking for that down to 68.05. Dollar yen looks really interesting. So this broke out of a really big wedge back in, when was this? Back in January, earlier this year. Really big move to the upside. Things have consolidated a bit in recent weeks, but there's been quite an impulsive move to the upside over the last 4 or 5 sessions. Potentially a flag pattern. Potentially we're going to see a continuation higher. There is a cluster of resistance around here of previous highs that were formed around the time of the height of the pandemic. If we can get above these levels, then we'll be looking again for a continuation higher on dollar yen. So that looks quite interesting. Given the strength of the move higher, 4-5 candles in a row, I think it's going to struggle if it gets here in the very short term to overcome it. That could be an opportunity to fade it. But if we do see any sort of consolidation prior to a test of this level, then maybe the breakout is more likely to stick if it does indeed occur. So keep an eye on that as well today. That's pretty much it on the FX front.
Nice one, Joe.
Okay. Gun to the head trades from yesterday, Steve. As you alluded to, you were stopped out on silver. We did, however, get a win on Bitcoin, 0.5R. The trade would have been nicer if we had held on to it for a bit longer. This is the trade here in the bottom right. So that looks like it's on its way down to where I hoped it would get to, but unfortunately yesterday it only made 0.5R on that, but that's the game. Steve, anything you particularly like, or would you like me to go first?
If you've got something, go first. If not, I'll just pick up on a couple of points.
I guess I'm hoping at some point there's going to be a bit of value creation in these US indices. So the S&P, I've noticed, has been sort of underperforming some of the other US indices at the moment. So this is one I want to have a look at today. I'm going to sell it at 44.12, and I'm going to target a move down to this sort of area of support down here at 43.40. Going to have a stop loss at 44.40. Think there is potential, given the sort of break of this very short-term support at 44.21, for this to maybe accelerate today. But don't be surprised if it doesn't, because it is the US markets after all, and they love buying dips. So that could easily be up here somewhere at 9 o'clock tonight. But you've got to be in it to win it, and I fancy that today. So that's my trade of the day.
Nice one.
What you got, Steve?
Feeling a bit negative towards crypto, towards Bitcoin. I think you went for this yesterday. I'm going to go for it today. Still feel there's a little bit more on the downside. It has to break this level here. Are we going to get the buyers coming in? While I'm talking about it, I'm actually talking myself out of it. But I'm going to do a quick risk reward trade because there's a gun to my head. Getting short at 7. I just like to round it up, so I'll round it down this time. 42,765, and let's go for a little 2.5 to 1 risk reward, looking to target a move to 39,265. My stop is just at this high here, 42,765, getting short of Bitcoin.
Bit of hesitancy from you there, but
yeah, I know.
maybe that's a good thing.
Yeah, maybe. I don't know. I'm not convinced.
All right.
But anyway, a couple of things I wanted to just sort of highlight. Let's get rid of this. Yeah, just thinking about the dollar really, and what you're talking about on the. Funny enough, we've got today we've had a few market alerts trigger on the QT platform. The dollar yen, we've triggered a buy trade with 70% confidence. We can see that over the course of the last week or so, new sentiment has picked up in dollar yen. Also see on the flip side, sterling dollar, new sentiment has been negative, and we can see these sort of like these pretty decent sell levels. We got quite close to the high, these market alerts back on the 14th and the 16th. New sentiment obviously had a little bit of a pickup here, but then has continued lower. So looks likely, and euro dollar as well. Same today, 70% confidence of a move lower in Eurodollar based on the market alerts and new sentiment. So yeah, just wanted to highlight those really. The dollar strength looks set to continue. We're getting that news sentiment coming through, which is positive for the dollar, and it's reflecting in these. Oh, look at gold. What's gold done? Has that done anything today? Today we've got 70% confidence in a move lower. We can see new sentiment has been quite stationary and just dropped off, looking to catch up with price.
Although sentiment looks bullish at the moment. on a daily
Sorry,
basis? The sentiment's bullish at the moment.
what, the news sentiment? Oh,
Yeah, the news sentiment.
sorry, yeah, that's the that news sentiment has moved bullish on the day. However, it has triggered a negative negative news sentiment confidence signal, market alert signal.
Yeah.
What am I trying to say? The one that actually is news volume fear index are through the roof on this, and this is moving negatively as the price is moving higher. So nothing here. From 7 days ago, we got 70% confidence the price would move lower. That's here, and prior to that, we got this one here on the 23rd. We did get it was 23rd, 5 days ago, 70% confidence in the price moving higher over 3 days. That was obviously a very good one when we saw the new sentiment turn around.
Lovely.
Yeah, so just picking up on those points.
Thank you, Steve. Good insight. Okay, so for the day ahead, the big number to keep an eye out for is at 3 p.m. today, UK time, which is a US consumer confidence figure for September. The index is expected to rise to 114.5. So keep an eye out for anything US dollar related come 3 o'clock today. Elsewhere, we've got some appearances from a host of FOMC members, including Chair Powell today. So keep an eye out for that as well. I don't have any timings on that, unfortunately, but just keep your wits about you because these FOMC guys will be speaking today. Anything else to add, Steve?
No, I think that's it. Good luck, everyone.
Superb. Yeah, cheers. Have a great day all. We'll be back tomorrow.
Ta-ra.
Goodbye.